Hey, everybody, Russell Gray, co-host of the Real Estate Guys radio show, here for another episode of Ask the Experts. And we're doing part two, really, of what was supposed to be just a one part, but we had so many great questions, we decided to make it a two-parter on build to rent housing. And our resident expert for this is Chris Funk from Southern Impression Homes and SunCoast Property Management. He's down in Jacksonville and really several submarkets in Florida, throughout Florida. Really knows the market cold. And if you haven't had a chance to watch the first episode, make sure you do that. If you're not familiar with the whole build to rent thing, we did a whole series on that. You can get that series by sending an email to BTR, build to rent, at BTR series at realestateguysradio.com. BTR series at realestateguysradio.com. And you can learn all about that and hear more about Chris and some of the other folks that are in the build to rent space. But build to rent is red hot right now. Florida is red hot right now. You guys are red hot right now. You're building tons of houses, you're leasing tons of houses. And I really like the fact that you both build and lease from an investor's point of view, but we got a whole series of questions here. So Chris, thank you for joining us again and just being so generous with your time and your wisdom.
Well, thanks for having me. Appreciate you.
Yeah, we've got a lot of great questions. So these actually all came from one individual, believe it or not, but he's an inner circle member of our syndication mentoring club. He is a very prolific single family home investor, owns hundreds of properties, and he's active in several markets. And he opens up with, hi, Chris, I'm grateful for how well SunCoast has managed our Jacksonville properties throughout the pandemic. So good job.
Well, we appreciate it. And Sep, I can speak for our entire team and say that they appreciate you. You are very well loved here at SunCoast, my friend.
Yeah, Sep could probably do a whole episode on just how to be everybody's favorite client, which is important. But he's had some horrific property management. I mean, I know because I work with him, and he's had some really tough property management market. So he's qualified to have an opinion. When he says somebody's taking good care of him, he definitely has a compared to what. He knows what he's talking about. But here's his questions. So the first thing, are you currently buying any materials in bulk to help avert material cost increases? In other words, do you have some type of a strategy to either buy dips and stock up, or to hedge in any way, shape, or form the rising costs of materials, which of course most notably is lumber, but it's also happening in other commodities like copper and
Yeah,
steel?
so the short answer is really no. We are not able to buy much in bulk just because we're having a hard time getting what we need when we need it, let alone being able to get a lot of it into the a lot of it into the future. So what we're doing right now is we're just ordering a lot earlier than we ever used to have to order product. And we've had to, like, take for instance appliances. We used to only order appliances once a tenant, once we received an application for an approved application and a deposit for a tenant. And then we put the appliances in at that point in time, so that the appliances aren't sitting in a vacant home, right for the picking, if some unscrupulous person wanted to come by. But the problem is appliances are now 8 weeks out. So, we really can't do that. We have to order the appliances and have them in, because we can't risk renting the home and then telling a tenant, hey, I'm sorry, you're not going to have a refrigerator or a stove for 8 weeks. That doesn't really fly. So we're seeing a lot of that. We're spending a lot of time with our suppliers to make sure that they know what our pipeline is, so that they're allocating product to us. So a lot of the materials right now are on allocation. So fortunately, we build a lot of products, so we're high up the tier on who gets their product first. But it's certainly been a challenge, and it's certainly been a challenge for our
So let me ask you a follow-up question, Chris. Knowing what you know now, and assuming that there could be another cycle like this, and I know I've experienced this with ammunition, right? There was a period of time where ammunition was really short, and it went way up, and then it went way down. And when it went way down, I bought a ton of it. And now it's selling for 3 and 4 times what I bought it for. And I bought it as an investment because I just saw the pattern. And I thought, well, this is something that might be an interesting barter commodity. And I won't go down that whole rabbit trail. But knowing what you know now, if we get to a point where there's abundant material, in other words, the supply chain swings the other way, would you consider stocking up in order to prevent yourself from being in this situation in the future?
Yeah, I would certainly consider hedging. Like lumber is a perfect example. Lumber is the one that's just crushing everybody right now. Everything is up. In a normal year, something, any material cost being up even 10% would just be, blow your mind, be astronomical. Well, lumber's up 345% right now. So, and we have other things that are up 10, 20, 30%. Electrical wires up, shingles are up, it's all up. But yes, I would absolutely look at hedging lumber. We keep thinking that lumber is going to come back down or at least level out. And so, we're thinking that hedging at this point is not going to be helpful, but it continues to rise. So every time that it goes up, I kick myself
like
again.
Bitcoin. It's like, oh, should I? I mean, I should have at 5, I should have at 10, I should have at 20, I should have at 30. Is it really? I mean, right?
Exactly.
But I mean, you're land banking and it's the same principle. If you know that you're going to use whatever it is you're using, you bank all the components of cost, because the things you can't account for are labor costs, because that's real time, and interest rates, if in fact you have to use financing. But I just think like syndicators are always looking for ways they can invest in something. And if I know I've got a takeout buyer like you that's buying a lot, I mean, if I would have bought all the lumber that you need at lumber prices 345% ago, which was like 2 years ago, right, I could be selling it to you for much under market and have a very dedicated customer, and yet make a huge return for my investors. So folks, I mean, I can't help but turn every conversation into a syndication conversation. But the fact of the matter is that when you're investing, if you own things that are real and going to be in demand, ultimately, it's better than money in the bank.
Yep.
And so always looking for those opportunities. Okay, well, we got a lot of questions to move through, so let's keep going. What percentage of your BFF tenants, your best tenants, are moving out to become homeowners each year?
That's a great question. We don't actually track, are they moving out to become homeowners, or are they moving out to find a different property? We probably should, but I do not know the answer to that, Seth. I apologize.
Okay, so anything would be anecdotal. Okay. Yeah, because we've had that happen in the past when it became a lot cheaper to own because of low interest rates and the right mix of prices and availability of loans. People that were renting would stop renting and go back to buying. And that, of course, is on a market by market basis. So we have to pay attention to that. Well, if you start to track that, circle back and let us know that.
Absolutely.
Average age of tenants seeking build for rent. Do you have any demographics there?
That is all across the board. There's not a great average, and all of our markets are so different. But every single age range, we're hitting every age range. Every, I can't. There's not just one specific that we're seeing. It's not just young folks. I mean, we're seeing a lot of families. We built a wide range of product as well. So, a lot of our duplex product is 2 bedrooms, 2 bathrooms, and a lot of our single family homes are 3 or 4 bedrooms. So, we get just such a wide variety, but every single product type that we have is in high demand right now. Like I mentioned on the previous segment, we've never seen so many applications come into our building as we're seeing right now.
Wow. Well, what about, he's got a lot of questions here. I'm just going to kind of wrap it all up. Solar, you're in a sunshine state, and you've got, these properties. And of course, for a landlord, depending on how they work the property, either it's a benefit to the tenant or they have lower cost electricity. Although I think, and you probably know better than me, but that's kind of a hard sell. Tenants maybe don't quite get that benefit. They enjoy it after the fact, but at the front end of the selling, maybe it's hard to make the case. But if the landlord is paying it, then all of a sudden, maybe it does make sense. But I don't know on a cost benefit analysis. Are you seeing anything anywhere in the building community where people are beginning to embrace solar?
We had seen some of that, and we were looking at it some prior to COVID, and it just didn't quite make sense at that point in time. It was close. It wasn't far off, but it became, became the issue of something else to manage and maintain. And there just wasn't enough additional juice in it for our buyers to make it worthwhile. I have not, however, looked at it in the last, 9 months or so. We've been dealing with a lot of other material craziness, and adding one more thing to that pile would possibly create a mutiny amongst my purchasing team. So we have not looked at it
But
again.
you'd have to re-engineer all your properties too, so that would be a heavy lift. Okay, now he wants to know a little bit, and this is good. I mean, you don't have to reveal your particular company situation, but he's asking about current physical and economic occupancy. Just for anybody who doesn't know, physical is bodies in the building. Economic are people actually paying the rent. Obviously, you'd like those to line up 100%. Not always the case. So what is happening? I mean, I know that you've got a long line and you're leasing tons of properties. I would assume that translates into high occupancy. And then the other side of it, though, is on the collection side. So what are you seeing there in terms of demand and payment?
Absolutely, yeah. So we're seeing right around a 97% occupancy rate, but we still are seeing about a 3% delinquency, and that delinquency is a little bit skewed in the fact that it's a higher proportion of a smaller number. It's a high dollar amount for a small number of people. So we
Because the
still have
delinquency accrues because one person's not paying
it,
month after month after month with moratoriums or whatever.
Exactly. So our number of people not paying is small, but the few people that aren't paying could be several months. Again, we're not seeing a huge number of those people, but it is painful for the few that I guess that's why real estate is definitely a portfolio business. If you have just one property, that property, could be luck of the draw. If you get that one bad tenant that just you can't get out, you could go a couple months, 3 months, 4 months, even with these moratoriums, and not be able to get them out. But again, by and large, we're not seeing huge issues with that.
So since we kind of talked about it a little bit, let's just dig in because it's one of his questions. What about evictions and CDC restrictions and moratoriums and all that? What's happening there in Florida? How are those evictions being handled?
We're actually able to get tenants out. In a lot of cases, we're able to get them out. But there's certain, like these few people that we're talking about that have really worked in the system and are not in my opinion, some of these folks just don't care. That it's a very small segment of the population. Because at the end of the day, it ruins their credit. It still shows up that they're under eviction with the credit bureaus and that they've had issues. And obviously we're never going to rent to them again. So the vast majority of our tenants understand that and want a roof over their head and are great people, well qualified, and have jobs. We do a lot of screening at our property management to make sure that we're getting good tenants in the house. I mean, we've seen, there's a lot of money out there right now on the street, and that's why screening is even more important now than ever, because there are people out there that have plenty of cash to pay their first month's rent and their deposit, but don't have a job. So there's people trying to make fake pay stubs and things like that to get into homes. So our like I mentioned, we've got a huge volume of people coming in, and there's some portion of those that are trying to get in and work the system into a nice house. So I can't say that we catch every single one, but our leasing team is doing a phenomenal job of sorting those folks out and getting good people in. So I think that's why we're seeing a relatively low percentage of delinquency, even though we've got these moratoriums in place.
Well, while we're on the topic of dealing with tenants that are maybe having a hard time to pay their rent, what about Section 8? Are these properties eligible for Section 8? Is that at the right price point? How does all that work as far as Section 8? And maybe take a second to just explain what Section 8 is so folks understand that.
Sure. So Section 8 is a voucher program. And what happens is, the tenant, the housing authority, the local housing authority gives them a voucher, a physical voucher. And that voucher says, hey, this tenant is authorized to find a home that is up to X dollars in rent, and the tenant is responsible for this portion, and the housing authority is responsible for this portion, or it could be the other way around.
I had one where the tenant was responsible for $15 a month in rent, and the housing authority paid $847 a month
Yep.
in rent. And I never saw the $15 ever. But the 847 was good enough, and I just collected the money, and she knew that, and she just lived there. And she was not the tenant from hell, but she definitely was not a fun person to deal with. She made life difficult for the folks around her. And you'd think with having a rent, basically free rent, she would be a little bit more cautious about getting kicked out of the program, but she wasn't. So Section 8 aren't necessarily my favorite. I'm not saying they're all bad, but that was my personal experience with Section 8. So then talk a little bit. Yeah. How does that work now in your world?
Yeah. So, and to your point, we've had a lot of great Section 8 tenants and a lot of great experiences as well. And so I think that the voucher program is a good program, and it's a great program if your house fits those price points. And so what we find is a lot of time in the build to rent sector, we're building a brand new house in typically a newer subdivision or newer area of town. And so a lot of times the rent rates that we're having to get for those properties and that we're marketing those properties are priced out of the Section 8 range. Not in all cases, but in most. So from a build to rent standpoint, we see very little Section 8 in our build to rent product. Now we manage a lot of older homes as well, where people may have bought them during the last recession. They've got slightly lower rent prices on them, and so we see a lot more Section 8 clientele in those lower in the lower price points, because the tenant is only allowed to go up to whatever number that's put on the voucher by the housing authority. They can go less than that, but they can't go over that. So, and they're not allowed to pay extra. So that's part of the program. They can't say, well, I'd like to pay extra money because I want to live in this particular house. The housing authority won't let that happen.
Right. And with the demand you're experiencing, there's no incentive for you to lower the rent to a range that would be acceptable to them. I suppose if the market conditions were different, you might. And in which case, that would open up a flow of money from the government, which is a more stable form of payment for you, but you got to accept a whole lot less to get there. And there's no need to do that today. So that kind of ties into this next question. We're only going to do two more questions, and this is one of them. Because you're involved in several submarkets throughout Florida, you have a little bit of comparison. Which are your hottest markets in terms of demand and lease up?
Well, man, right now they are all hot. I would say if I was going to pick the hottest right now is probably my Ocala market. The Ocala, Citrus Springs, Inverness area of the state, which is Central Florida. We have put a lot of product on the ground there, and we just had a leasing meeting today, Wednesday. Yeah, yesterday is our leasing meeting, and we're nearly out of product to rent in Ocala, and we're building a lot of homes there. A lot of duplexes, a lot of quadruplexes, and a lot of single family homes. And so that one seems to be on fire. Jacksonville is always on fire. That's a fast moving market. But if I had to pick one right now, I'd say it's Ocala.
Okay, and what do you think's underneath that? Where do you think that's coming from? Is it because just Central Florida? And I mean, I've been high on Central Florida for probably 7-8 years. And Jacksonville's a little bit up to the north, but that's Central Florida. Just, so people kind of get their orientation, where is Ocala in the market? When you talk about Central Florida, what are some of the major cities that people would recognize that make up what is Central Florida?
Yeah. So, I mean, everybody thinks of Central Florida as Orlando. I mean, that's that's truly the center of the state, Florida. When you look at Ocala is a little bit north and a little bit west of Orlando. And I personally have a place down in an area called Umatilla, which I absolutely love. I would live in the country on a horse farm if I could, if I didn't have to work in the city. So it's a very country lifestyle in some of these areas. And I say country, it's a little bit more laid back, less city, less suburban, less skyscrapers. So a little bit of a slower paced lifestyle, a little bit bigger lots. And you see people for everything. There's a lot of jobs in that area. So what's driving people there? It's probably one of the most affordable places in the state. Now, Florida in general is very affordable. So our price points, we are very rarely selling a single family home over $250,000 and almost never selling a single family home over $300,000. So for the rest of the market or the country, people from New York and California, they just can't fathom that, that we can even produce anything for that low of a dollar amount. But Ocala is even a little bit less than that. It's got great jobs and a great lifestyle.
Yeah. Okay. Go ahead.
I was going to say we're also seeing our Southwest Florida market has been very hot from a rental standpoint. It's a little further south. It's a little bit warmer. So people that are moving from New York and some of the warmer or colder weather states, if they say, hey, we really want to get warm and stay warm, we don't ever want to see a temperature in the 40 and 30 degrees ever again, they head down to Southwest Florida.
Wow. So it doesn't surprise me that affordability was near the top of the list. That's what I suspected, because I just think that that's where folks want to be. I think that right now with what's going on in the macro economy, that, we'll see how long all of this stimulus can last. And if it really jumpstarts an active real economy, if it does, then, maybe people want to live in more expensive areas. But right now, I think people are trying to figure out how to make a better life for themselves with less. And as people from the Northeast, Boston, New York, Illinois, whatever, are pouring into Florida and going into the major metros, they're taking the folks who are already there and pushing them out to these peripheral markets that are more affordable, because the big money coming in from out of state, those folks that are local can't compete. Now, I don't, that's something, a pattern that I've seen in the past. I'm not saying that's what's happening in your particular market, but it's what I've been writing about for quite some time and been expecting to see in terms of migration patterns, just based on the macro picture. So I always like to compare what I think, as I lock myself in my room and study my news and stats and think about the way the world works. And then I go out in the real world and ask people, that are boots on the ground, active in the market, what they think. And so it's interesting that you came back and said that that was probably the likely driver. That makes sense to me. Okay, last question has to do with REITs and hedge funds. Warren Buffett famously said, coming out of 2008, when real estate was on sale, he said, if I could own 200,000 homes, I would. Didn't take long before Blackstone went out and bought 20,000 of them. And they were buying value. Now, everybody knows that real estate is red hot. So it's less about buying value and it's more about buying momentum. And I don't know if the REITs and the hedge funds are there yet, but I would think that if they are, they would be showing up in markets like yours. Have you seen any activity at all from these big money funds coming in, trying to buy stuff in bulk? And if so, what kind of effect is that having on your market?
Oh, we get, if not one call a week or more from a big hedge fund or a REIT or one of these big organizations. And, they're trying to do exactly what we're doing and what everyone on here is thinking about doing, which is buying real estate to rent for the long term. And, we made a decision several years ago that we wanted to be the supplier of this product for individual investors, smaller mom and pop investors that, are growing a portfolio for retirement. And that was for multiple reasons. One is, we serviced a lot of those clients already. And so we had a, great database. We had a lot of great relationships. And, and two was from a risk mitigation standpoint from our business. we see the hedge funds for our business as a risk. If somebody comes in and buys 200 properties, well, I've got two issues there. One is that takes a lot of inventory that I can't sell to my individual investors that are depending on me to supply them product. And two is, if something happens with that big hedge fund, all of a sudden 200 sales are gone, and and I've got to backfill, a big supply of inventory. So we have not sold a lot to those folks. We have sold some lots to them, so we've sold some lots in some communities, but we haven't done a whole lot of sales of new construction.
Okay, so they're active in the market, which means by definition, they're going to have some impact on demand. They come in with gobs of cash. And my experience has been they're typically willing to overpay a little bit because they're speculators and they don't mind getting a little over their skis. Uh, and again, if they're enamored of your market and the asset class and they're active, and that wave is beginning to build or continuing to build, it's just one more thing that allows a little investor to get in early and kind of ride that wave. And
yeah, I mean, they've really, I would say that they've really made the biggest impact on the traditional national home builders. So these big national builders, they're now competing with them for land positions. So we talked in the previous segment about shovel ready lots. These big hedge funds coming in, they look at real estate and single family subdivisions completely differently than a national home builder. So the national home builder has to pay, what they can pay for a lot right now to make a margin selling that home. Well, the economics are totally different for somebody that's, going to buy it and hold it for 20 years. And so, we've seen those groups out there competing for land deals, pretty heavily. And to the point where some of the national home builders have said, well, hey, if you can't beat them, join them. And some of them have started their own build to rent funds to keep some of their communities. So it's certainly, certainly something that is growing in momentum, here now and over the past, several years.
well, it doesn't surprise me, when the market's on fire, when an asset class is on fire, money chases it. And of course, it's all happening because people are coming into the space, meaning, buyers and tenants. And so it's attractive. It's gravitational pull. And that's why we stay close to you, because we know you're onto something. It's hot. And I love the fact that you are reserving what you're doing to feed Main Street investors. Robert and I have been on a mission for a long time. In particular, it's a theme of our syndication mentoring program, and that is Main Street investing in Main Street. I'm not a fan of Wall Street. I have personal history. I don't like it. I don't like the way they play. I don't like the way they use people, clients, take risks with other people's money. I much prefer to see Main Street investing in Main Street and real assets. And it doesn't get any more real than housing. So I love what you're doing, Chris. Keep up the great work. Thank you so much for being so generous with your time for these 2 episodes. Folks, if you didn't watch the previous episode, then we'll put the link down there and they'll kind of cross-reference. But lots of great questions. We appreciate that. If you do have questions, we'll put the link to the Ask the Experts form down below. And if any questions came up as a result of this and you want to submit them for the next episode, next time we do this, go ahead and do that. We'll just build up till we have a lot of questions that we haven't answered before. And when we get a bunch, then I'll invite Chris back, and I'm optimistic he'll be gracious with his time one more time and his wisdom, and we can have a conversation and get your questions answered. Chris, any final comments for the folks before we say goodbye?
No, I think we covered it, but keep those questions coming. I'd love to get on here and talk real estate with you. So thank you for your time.
It's fun. Yeah, I think we're putting together a field trip. Aren't we going to bring some folks out?
Yeah, absolutely.
Yeah, depending on when you watch this. Is that on the calendar now?
It is on the calendar, and I should have had that date handy. I don't know what it is, but I know.
Well, that's okay. We'll look it up and we'll put it in the show notes. If you actually want to visit the market, and I think Robert is going to go on that tour too, right?
Yes.
So hang out with Robert Helms, host of the Real Estate Guys radio show. He's a fun guy. He taught me real estate markets. We traveled all over and went to all kinds of markets. I may go depending on when it is. I'd really like to see it and give me an excuse to get out there. Maybe I can visit my nephew, assuming they'll let him out of quarantine, because they keep those NFL players like very sheltered so nobody gets sick. But assuming they'll let him out, it'd be great to see him. But in any case, I'd love to see you, love to see the market, love to see your products. And so we'll put the show in the show notes. We'll put the field trip information there. If this gets out ahead of that, then folks will have a chance to sign up. So we'll do that. Really appreciate it again, Chris. Thanks so much for your time today.
Thank you, sir. Talk to you soon.
All right. Take care. Before you go, 3 things. Number 1, subscribe. When you subscribe, you build up our subscription base, and that helps us reach more people. But even more important, it helps us attract great guests and subject matter experts to share their ideas and information with you. Number 2, click that notification bell to make sure that when we do post a new video on this hot topic, you're notified right away. And number 3, share. Please share this information with friends. Help them get on board this bus. Help them protect and preserve their wealth to take advantage of what's going on in the world today. All right. Thanks so much, and we'll see you in the next video.